Good morning, traders. This is a pre-recording of the Trader Bite for Monday, May 4th, 2015. It's 7:09 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A little bit of news overnight. The major European PMIs come in mixed. China's April final HSBC manufacturing PMI data missed expectations to register its worst reading in a year, 48.9 versus 49.4. There's quite a bit of chatter on the wires and speculation that rate cuts are looming. This is causing a small bid to come into the market today, pushing the S&Ps to new highs on the opening of the European session. A reminder that today the UK markets are closed for May Day holiday. The rest of Europe had May Day on Friday. The UK has it today. And then the Tokyo Stock Exchange is also closed for Greenery Day. Looking ahead, we have 8:45 Central, 15 minutes after the open, U.S. ISM New York. It's a low importance number. And at 9 Central, we have factory orders expecting 2.2%. Also, we're getting durable goods, U.S. durable goods orders revisions. The prior's 4%, no expectations. And then at 10 o'clock Central, we have J.P. Morgan Global Manufacturing PMI. Prior's 51.8. And then there's the, as far as speakers, we have Feds Evans at 11:25 Central. Feds Evans speaks on economy and monetary policy in Indiana. And then Feds Williams at 2:10 p.m. Central, speaking at Pacific Community Ventures luncheon. Not much expected, although we need to pay attention to Evans. Since we're here and it's Monday, let's take a look at the rest of the week. Tomorrow, we are expecting the Reserve Bank of Australia's rate decision, U.S. trade balance, U.S. services PMI, API crude oil inventories after the close, New Zealand employment. The Bank of Canada's Deputy Governor Wilkins is speaking. And then Wednesday, we're looking for HSBC Services PMI. We're looking for also European Services PMI, U.S. ADP employment, the crude oil inventories number, and Feds Kosher Lakota, Feds Yellen, Feds George, Feds Lockhart. And then for those who are trading the DAX, the BMW earnings are expected on Wednesday as well. Thursday, Australian employment change, initial claims, EIA natural gas, UK general election, which continues to be muddled and mixed. It looks like they're probably going to have to form a coalition government there. The results for that are expected on Thursday. And ECB's Mersch speaking. And then on Friday, Bank of Japan's April minutes, German industrial production. We have U.S. non-farm payrolls, which is a key economic release for the month. U.S. non-farm payrolls at 7:30 a.m. Central. And then U.S. and Canadian unemployment, ECB's Constancio, and Swiss National Bank's Jordan speaking. That covers the week. Let's take a look at what we did in the markets. So on Friday we gapped up in just right on value high in range, and the expectation for Friday is some responsive selling back down into the 2081 area, potential basing at 2078. A wide ranging day on Thursday told us that Friday's likely to be an inside day. So I was looking for responsive selling into this this LVN at 83.50 potentially, and then if it held the 83.50, I was looking for it to rotate to become choppy in this high volume node, and then to turn up and start moving towards the high, but likely to be an inside day. If it falls through the LVN, the expectation was 81.50.78, and then push all the way back down to 74.50.75, that key area, and then be choppy in here. What it ended up doing is it ended up opening and running up immediately and then chopping around for quite a bit of time for about the first hour of the open, pushing up to again that 95.50, the MC point of control, 95 and a quarter, and then being rejected. It one ticked the IB low and had a failed auction to the other side. One ticked the IB high, had a failed auction to the downside, and then pushed all the way back down, and then retested the mid, higher low. We're back to 88 again, and then it started to walk its way up to push to 21.02 on the dot. That's a naked point of control from the 29th, from the Wednesday, and it touched it, pulled back. The expectation was for a pullback into this 96 quarter. It got to 96.75 and it finished near highs. The high on Friday was weak with the point of control against the high. Therefore, the expectation was for continued highs into the overnight session, which is exactly what we got. So we never got the Hypo 1 pullback. It just had nothing in it. It was choppy and fairly difficult to read. That's why on Friday's webinar that was open to the public, I went over the NASDAQ where the trade was a little more obvious. The NASDAQ, in fact, on Friday played out its primary hypothesis beautifully. It stayed within range, was unable to extend its range up, but it still has a naked gap above at 44.80. So overall, what Friday accomplished is to push back up a little bit after that high at 21.1975 against the 21.20 target. We push all the way down to the 69 area, and then we're coming back up, and it looks like we're continuing to pull back towards the all-time high here. I'm not expecting all-time highs to be taken out already, but the market does have some strength in it. Let's look at the overnight session. So the overnight session is showing, and by the way, the close on the Globex session on Friday was fairly strong. I mentioned that in the video. These last two bars ended up extending the highs through 2088, but overall there's a fair amount of strength coming into the session, to the day session on Friday. Last night and over the weekend, over Sunday, the market just drifted downwards. It had a small move down with the HSBC announcement on China, and then with the European Open, it immediately took a bid and has been rallying. We have a double distribution profile with the neckline, or the LVN, at 2103.50. If you recall, 2103.50 played out quite a bit back here. We have 2103.75, 2103.50, tested from above 2103, break to new all-time highs, come back, and we chop around at 2103.50, and so on and so forth. That number's been playing around quite a bit. The market's got memory. Don't forget that. The market does not forget prices. So we're leaving this 2103, and I'm looking at this area as the over-under line for the session. So keep an eye on that area. The primary hypothesis for this morning is responsive selling. I'm looking at resistance from above. So if I look at where we are here, we've had these days where the market has stepped down. Actually, the better chart to look at is this one. Let's follow value. So we've got this this value area point of control from last 2 Thursdays ago. We push up but continue to keep the point of control in value. Then we make the new all-time high. Value shifts down. Value shifts. The point of control shifts down. Value stays the same. Point of control shifts up. Value stays the same. Point of control shifts down inside of value. So this is all balance here, and that's what we're pushing into. So essentially, if we looked at these days here as one contiguous balanced block, you'll see that the most valuable price is 2102 with a neckline up here at 2110, which is today's target. 2108.75 is the overnight high. Let me turn down my news feed here. Is the overnight high, but 2110 in this area has an LVN on this composite profile. In fact, if I pull this back even further, it shifts the point of control up to 2111. So 2110, 2111 is the key area I'm looking at for today on the upside. But overall, I'm expecting responsive selling back towards 2103, and then I want to see a reaction at 2103. If there's a reaction from buyers, then look for 2111, 2112 as a target. But again, I expect the market to try to push up to new highs and then to fail and fall back over. That's what I'm looking for this week. And then with nothing going on this week, really until Friday, we've got plenty of time to chop around in this area. This area here, get used to these prices between 2090 and 2112, 2115. We're probably going to trade quite a bit in this zone here over the next few days. Anyway, that's what I have for a hypothesis. I have to cut this video short to run out, take care of this errand. Hopefully you're getting something from this. I know a lot of you have written to me over the weekend asking if the webinar on Friday was available as a recording, and it's not. As I indicated when I announced that I was opening that up to the public, that the recording is only available to S5 members as part of the archive of webinars that we do every week, and it's not recorded, but there will be another public session soon. Those of you who attended, I hope it was useful. I hope you learned something. We walked through some trades from on the NASDAQ from Friday and discussed a few more things with statistical studies and things like that. We'll do another session soon. Good luck. Watch your risk. Take care. Bye.